Hey everyone, we're going to take a quick break and talk about our sponsors for the month, AMP Agency. AMP is a full-service digital marketing agency that specializes in tour, rental, and destination marketing.
We would not have sponsors on the show if we could not vouch for them ourselves. AMP Agency does a bunch of stuff for Destiny Water Adventures personally. I 100% vouch for this guy. I've handed them over to other companies in the past before they officially became a sponsor, and they have had nothing but great things to say. If you guys are doing your own marketing and doing a piss poor job of it, do yourselves a favor. Hand yourselves over to AMP Agency, specifically Steve Edwards, their CEO, will call you personally and have a great conversation with you about what you guys need to do for your marketing.
Listen, guys, they do pretty much everything in digital marketing. Website development, maintenance, Google AdWords, PPC, graphic design, social media management, SEO, and a myriad of other things. When you choose a marketing company, it's so important to choose a company that knows your industry. And AMP Agency knows activity marketing, especially water sports and tours. They got a promo going for Awkward Watersport Guy listeners for their managed websites. Use promo code Awkward Podcast when you go to amp.agency. Again, that's amp.agency, promo code Awkward Podcast. You get 3 months free and get started with AMP Agency. All right, guys, let's get back to the show. Hey everyone, and welcome to episode 98 of the Awkward Watersport Guys podcast. Today we are joined with Keith Gause of Tideland Consulting. He is the president. Welcome, Keith, to the show.
Hey guys, appreciate it. Thanks for having me.
And we're going to talk about a whole bunch of things today, primarily in the financial business planning, because when we finish the years, we have all this money, and what do we do with it, and also what are some things that we should be doing throughout the year. And Keith happens to be a business planner, and I think it was being a great episode to kind of walk through some of those opportunities and scenarios and pick his brain. So
Keith, Greg, are you so stiff and nervous this morning because there's double the sexiness happening on this show, like because of the beards and all, just the good looking? Are you worried?
No, not at all.
All right, I'm just double checking, man. You seem like a little, you seem very professional on this one, man. Is it because it's finance?
I don't know.
Fuck, man, let's party. Let's have some fun. We're talking about money. Who the fuck doesn't love money, man? Let's talk about fucking money and how we can make more of it.
I'm down.
Keith,
okay.
Tell us a little bit about yourself, what it is that you do, a little bit about your backstory, man. Let's go.
Yeah, man. So I've been in the industry a bit over a decade now. I'm out of Jacksonville, Florida. I was born in Houston, Texas. I grew up here in Florida. Did some time in the military over in your neck of the woods, over in Fort Walton Beach. I was with the 20th Special Operations Command over there from the end of 2000 to 2005. Got out after visiting all the armpits of the world, and doing shit with 9/11. And what happened? What the fuck happened there?
I don't know. We just got some weird fucking headshot or something. The three of us
there was a little icon that said "Take squad shot," and I'm like, I didn't know it was actually going to warn you guys.
Fucking PC users.
I went straight into glamour shots.
I just thought it was just take a screenshot because we always lack photos of our show. So it's pretty funny because Keith is like, what the fuck is going on? Kevin's laughing, and I'm just like, whatever. So, anyways,
he's like, what kind of podcast clown show am I on right now? He's like, I've done so many mindset fucking special. The moment everyone finds out you're special ops, they want to have you on their podcast. Like, how many push-ups should I do in the morning before I take my cold shower and optimize my life? Keith?
Stay hard. No, back before you took this cameo picture. So I was in Destin, deployed a lot, obviously, with 9/11 happening. Went through some incidences there and got out in 2004, came home early 2005. Did everything, the next step in the regiments, go become a police officer, because you run around with guns and shoot at people over in the desert. You want to do that shit here. So I got hired on at the local department, spent some time doing the SWAT thing, spent some time doing narcotics, and met my wife. Had two girls. They're now 12 and 10. And I'm what you call a shit magnet. So they were like, hey, where do you want to work? And I'm like, just put me in the worst spot in town and I'll go find shit to do. So the wife, being, mother hen, said, hey, it's time for you to get out. It's time for you to do something different. I want to make sure you make it home, especially to the kids. So luckily for me, during my law enforcement career, I created a startup bounce house party rental company. Went from one bounce house to just over 500 inflatable units over the years, and then ended up selling that. I built that thing up to, we were doing about 400 to 500 grand a month in revenue. And the wife basically gave me the ultimatum. She's like, hey, shit or get off the pot. It's time for you to leave law enforcement. We've got too much important things happening. And the business really needed me as the full-time CEO. So I made that transition in 2012 and ran the company, was approached by a venture capitalist group, and ultimately got to exit. Through that hands-on experience, I knew that I wanted to be in the finance sector because I got raped in taxes. I got destroyed in things that I could have avoided if I had the education and the principles around how money worked. So 2012, this is when this company kind of got its birth. I went up the ranks at Northwestern Mutual, right? They paid for all my licensing, which is why I went there initially. And so I got really good at selling product. About 5 years into that, I realized that selling product was for the birds. And I didn't want to just sell a product to people. I wanted to help them financially. So transitioned into this business consulting world because I love business owners. And that's when we kind of adopted this one-stop shop and really being able to educate on tax strategies that you guys can take advantage of that we don't know about because our CPAs and accountants aren't proactive, right? They're reactive. So heavy in the tax space on helping business owners keep more of what they earn every year. Keeping more of what they earn allows them to then deploy that capital in other ways to create more wealth, right? So it's the cycle that starts once we learn the principles of how to move the money. So fast forward to today, we've been open for about 10 years. We've got an office up here in Jacksonville. I've got an office in Orlando. We're in the process of creating an office in Tampa, and we're licensed in all the states. So anywhere in the country, we've got clients all over the country that are spread out, and really just focusing on building a one-stop shop. So, taxes, asset protection, risk management, payroll solutions, you name it. If you need it in a business, we offer that service to these folks now. So that's kind of the story of me and how I got to where I'm at.
Yeah, man. Cause dude, I got a few questions for you, but I'd just like to give a little bit of background for our listeners, like where Keith comes from. As always, guys, Keith and I started working together. Well, actually, I haven't even cut him a check yet. I'm pretty terrified at what that bill is going to be because we've had a lot of conversations. He's really learning about my business, and so I just to give a little bit of context how we met Keith. I met Keith through like a trainer or something like that. His partner or one of his sales guys, whatever David is to you. I don't want to misspeak on that. And so Keith's been working with us, and he really opened up to my eyes. There's a lot of you guys listen know this is my first business, and I probably don't do every stupid business owner thing on the like that you can possibly do. Talking with Keith, it's just like every time I tell him what I'm doing, he's just kind of like, yeah. Heard that before. So, what is the first, what would you say the main kind of dumb common thing that all of us first time business owners do? Like if you can, I know there's probably a billion one, but what's the number one thing you're just like, oh man.
Hey everyone, we're going to take a quick break and talk about our sponsor for the month, TourScale. TourScale offers 3 different franchise models designed to work alongside your existing business. They are all manufactured right here in the U.S. and include everything you need to launch your new business, including web, marketing, analytics, and data to automate your tour operations. Let's talk about the different options they offer. Trolley Pub is a 16-seat pedal-powered bike. Next is the Paddle Pub, a 26-passenger U.S. Coast Guard CO-wide cycle boat. And lastly, the Tiki Pub, which can be built for 6, 20, or 30 passengers.
Hit up my boy Kai at tourscale.com. That's KAI at tourscale.com, or give him a call at 888-753-7507 and ask for Kai, or hit me up in the DMs and I'll give you his personal phone number. And we can talk all about how I saw one of Kai's pedal pubs at Arrival, and I thought it was super cool. And when we got into the weeds a little bit, Kai kind of explained to me the differences between their product and some of their competitors' product, and why it was so important that this stuff was being sourced here locally. And I couldn't agree more. You'll also notice a lot of this stuff is called pub, and which is 100% on brand with what I'm all about. Getting your people out safely, and a model that promotes safety by having a captain or somebody driving the vehicle that you're in while you're having some drinks. And I couldn't be more on board with those ideas. So hit up Kai at Tourscale and talk to him. Let him know Kevin sent you from the Awkward Watersports Guys, and maybe he'll kick me back like a kickback or something, which would be dope.
All right, guys, let's get back to the show.
They just do. And that becomes the problem, right? So the question that I asked is, like, how does a business formulate itself? All three of us had an idea one day. We're like, hey, we could probably monetize that. Then we figure out how to monetize it. And then the next thing you know, we're 4 years into a business. The problem is we just ask our friends, hey, this is where I'm at. What should I do next? And we go and stack the deck. We get general liability. We get the websites. We get the marketing. We do all these things, but we really don't focus on what the most important piece of it all is the revenue. I can't tell you guys how many 6, 7, 8, 9-figure individuals I work with that don't know their numbers. That is the biggest mistake. And it's the most important, but no one ever does that until they wake up one day and they're like, shit, I owe $400,000 in taxes, right? Or something from a income perspective gives them that aha moment. So, the biggest takeaway for anyone in here today is to focus on your P&L from day one in the company. If you can always understand how your money's moving, you can make the best decisions ever and avoid a shit ton of pain points.
Yeah. I always get a kick out of talking to someone and we bring up like the balance sheet and cash flows, and they have no idea what I'm talking about. I'm like, you don't know what a balance sheet is? And they're like, no. They barely know what a P&L is. They just see money coming in and money coming out, and then whatever's left, that's what they look at their profit.
Look, I'm 100% guilty of it. And I know a lot of guys in our space that are super guilty of it because they are 100% lifestyle guys. You don't get into water sports because, and maybe some people do, but like a parasailing boat or dolphin tours, like the rental's a little bit more commodity based. So, any fucking knucklehead can kind of get started into that. But some of the more specialized stuff, they just loved it. You know what I mean? Like, man, almost every guy I know that started a parasail company, they were a captain for somebody else. They were like, I can figure out this myself. I can do this myself. I can just live the fucking dream of being a business owner and have all of this money and just like, fucking what, it's the same thing, man. Just driving it for, yeah. We all had that little hopeful, awesome, amazing dream in our skulls. And, what happens is that they learn, and as we all do, and if you're doing a good job, you're really learning some very expensive lessons because you're scaling. And as you're scaling, you're going like, fuck. And then you maybe, if you're smart, I think, have an aha moment. If you're still around after a few years, you go, oh, so this is why 90% of businesses fail in the, first 5 years or whatever it is, because there's this, somebody in a dream, you know what I mean? Not necessarily like entrepreneurs in the classical sense. So, so with that being said, Keith, then, so let's just say somebody's getting started out and they don't have a budget for a financial consultant. And just spoiler alert on this, guys, because a lot of people we all get calls, right? From the, consultant world. You get all these consultant things that are people, hey, I'm a consultant. So I actually reached out to you guys, believe it or not. They didn't reach out to me. So that was the first, for me, just because I am a cynical, skeptical entrepreneur, I'm always kind of like, well, they didn't pitch me. So I already feel more comfortable about that. Sure. But regardless, so two-pronged question. is one, if you're a baller on a budget, how can you start to do some things the right way before you learn all these expensive lessons? And then two, what is something to look for in a good financial consultant?
Yeah, so two good questions. Baller on the budget. Let's talk about that one first because it's important. Back to my comment, if we focus on creating and educating on a P&L, we focus on the numbers, we know what our money in, money out is, right? Then we can focus on making the right decision where the next dollar goes. So that next dollar needs to be in one of two places: hiring the consultant to help you avoid all of these mistakes, or hiring the right CPA firm that's going to really help you with your numbers. Okay, so those are two spaces that I tell everyone that don't step over a dollar to pick up a penny, right? I don't want you to step over a dollar because you're afraid of the bill, to pick up a penny because it's a cheaper learning experience for you. When we approach this, and I think I even told you this, Kevin, like when we first got started, it was like, if I don't save you 5 or 6 times my fee a year, I'm going to tell you not to hire us. Like, we can't help you. And so I think people have to look at this particular piece of the puzzle differently than they would elsewhere. So right now, when people look at hiring, they think expense, right? Just like we think, I need to hire the next employee for $80,000 a year. Well, no, you need to hire that next employee for 30, 60, 90 days until they prove that they're worth that $80,000 expense, right? So this is truly a 2 or 3 month cost to you. In the relationship for us, again, if we can't save you money, you're not going to hire us. But the idea is, like, I'm going to start helping you chip away and save money from day one. I'm going to help you understand things you can do to maximize each dollar, minimize your tax liability, and keep more money in-house. So we got to be able to decipher, like, where's my next important dollar? Where's the best place for me to invest that dollar? But we're not going to know that until we know the numbers. So knowing the numbers, then either consultant to help you avoid all of the bruises and bumps, or really strong CPA and accountant firm so that you can still pay attention to your numbers. They can still do some tax strategy planning, and you can start to understand the two flows there. Does that give you enough there, Kevin, on that piece? Yeah,
I would like to expound on that just a hair before we go into the next, what to look for in a good consultant. Again, this is just from a personal standpoint, and I'm sure you have a lot of this going on, but it's something that I firmly believe in. I like to work with everybody that we hire out that's out of house. And then what I want to do is have somebody in-house that's paying attention, watching what they're doing, so we can double down on our efforts. Not so I can replace that person, fire that person, because I'm always like, especially let's say for marketing, for example, I have people that I contract out. We have people inside. I do stuff like, we're like marketing. Would you say it is a good idea that you are working, and I probably know the answer to this, but like, and again, I know you don't have like a ton of cooks in the kitchen when you guys are trying to execute on a deliverable. But would it be bad advice to start to like make sure that you're not just going like, hey man, here, you handle this so I can run my business, but having somebody in your organization that has a more clear understanding of how the finer points of your business are working, so that they can work hand in hand with your financial consultant and make, a data-driven decisions based on the information.
Yeah. So two things there. One, we definitely want someone in-house that we can communicate with and effectively and efficiently on the go. 2 reasons for that, right, Kevin? Your business changes every day. The bank account volume changes every day. Shit happens every day, and you need someone on a call basis, right? Hey, I got this question. Hey, I need this contract looked at. Whatever the pain point may be. So there's got to be someone in-house that has the ability to field those calls, make those calls, but also, and even more importantly, be there for us to educate, right? My goal for a lot of our clients is to go through the growth orient stage, right? And get you to a level where I'm ready to tell you, like, hey, you guys need a full-time CFO in-house. You guys need a full-time roster in-house. You're at that level. We just had that conversation with a client recently. We're like, listen, we can continue operating this way. You're going to have to pay us a lot more for us to keep up with your volume of what you guys got going on and everything that we were doing for them. Or you can hire a CFO and I can then hand over everything to the CFO and get them up to speed in your business, allowing you to go create more business and then have someone you can literally walk into the next office and say, hey, I've got a question. So there is a tipping point where that makes more sense. And our job is to get you there, right? And then be vulnerable enough and transparent enough to say, hey, man, you guys are in a good spot. Like, let's start looking for the CFO in the hot seat within your organization.
Okay, so Greg, you want to jump in because like I love this shit.
So,
man. I'm sorry,
Keith. The type of listeners of our show, we have people that are just starting out that are making maybe 100,000 a year. We have some that are making a few million a year. There's all sorts, but most of them are in the water sport, boat rental, boat tour business, or majority. What are some actionable things that this, and we're going into tax season. So what are some actionable things that they should be doing right now, preparing for for the tax season that might save them some money? I mean, what are
Good. So I want to kind of highlight tax season starts January 1st, right? The problem that we run into most oftentimes is that, and this is no dig on CPAs or accountants, it's just mere facts, they don't really want to talk to you until it's December. Hey, start collecting all your stuff, get it over to us, and we'll have your return prepared and ready March, April, May, right? The problem is that we've got 11 months of actionable decision-making, if you will, that we've missed. Because I know I can't remember 3 weeks ago. How the hell am I supposed to remember purchases or expenses or whatever the case is in January, February, March, all the way through December? So step one is to encourage and or force your CPA, accountant, whoever you're working with, to talk with you at least once a month. You want to make sure that they're being proactive in the tax space and not reactive. Again, not a dig, it's just the mere fact. Every human has to file taxes, so why would they be proactive when they got 20,000 people beating their door down to file a tax return? Where we're different and where we try to come to the table from a different stance is we need to start offsetting Uncle Sam's piece of your money from day one. So if we can utilize it 365 days and start looking at taxes through the windshield instead of the rearview mirror, I'm going to be able to save you and help you utilize some things that we'll talk about here in a second to keep way more of your own money at the bottom line. Then you can grow better, grow quicker, grow faster, buy more shit, right? So what are some of the things that a lot of people want to talk about? So one that everyone loves, if you're a business owner and you have children under the age of 18, you can put them on payroll. Okay, so the federal limit in 2022 was $12,950 for the year that you can pay your child. That is a way for you to move $12,950 from your top line of the business to your children's bank account, college fund, bank account, whatever it is, right? You can put it in multiple places, tax-free. As long as you don't pay them 1 cent over that $12,950, it is tax-free to your children because it's under the standard deduction limit. So you basically just move $13,000 for one kid into a bank account that you can utilize for your child, tax-free, and it reduces your top-line income of the business. So it helps reduce tax strategy in the business as well.
So an example of this, so my daughter, we spend $15,000 a year on competitive gymnastics. Could we essentially pay her gymnastics gym membership through that fund?
Yeah. So I'll tell you what I do with my kids. 2 girls, right? 12 and 10. They both get paid $12,950. And in 2023, I think it's going up to $13,950, almost $14,000. I'll get you guys the hard numbers after the show. So I pay them. You don't have to pay them weekly, monthly, whatever. I just cut them one check at the beginning of the year and I throw it into their account. Okay. So A, I'm reducing my taxes by $26,000, right? And B, I'm able to then go spend that $26,000 however we want to spend it. Back to school shopping, tuition, college, you name it, right? So I don't know how old did you say your child was?
I have two, a 7 and 10.
Okay. So for you could do this strategy, and when they get into middle school, if they're going private, high school, private, or then into college, it's tax-free college money. You could put it into a 529 and pay their tuition. You can put it into a bank account, pay for gymnastics, equestrian, whatever they're into. So we use ours for travel, right? Family vacations, back to school shopping, whatever the kids need.
So you said so under 18 basically, right? Or
yeah, I mean, because for most oftentimes at 17, 18, they're going to go get a job, right? And they're going to make more than $12,950. If they don't, you can make up the difference.
The minimum age is 7, right?
That is a very gray line.
Okay. Very gray line. Okay.
I don't know. Not for me, man. We're like farmer type people, man. My daughter is 7 years old. She's out there riding jet skis.
Yeah, I've got clients that have a 6, 7, 8-month-old child. They put them in a logoed onesie and they put them on Facebook and they utilize them for
fucking marketing.
So Keith, if they get their own job, then and they make their own money, then it kind of it omits this. Like you.
In a sense, yes. So what we focus on is the standard deduction, $12,950. So if they have a job, working with your neighbor, mowing some yards or whatever, and they're making $10,000 for the year, you can pay them the difference. You just can't go above that income.
Okay. All right. This is pretty big.
So that's a standard.
And I got to put something out here, guys. So I know what I'm going to pay Keith for that information going forward the year, because David gave me this whole thing too, and it really made me feel good. I was like, right from the get go, I felt like, man, they're delivering value. So I want you guys out there. I really want to get some takeaways, because I talk to way too many guys in our industry. They fucking hate spending money on marketing. They hate spending. It's like they feel as though like if they can't touch it or see it, then it is not an asset and it has no value in it and it has no equity in it. Mm-hmm. You have to change the way you think about shit like that, because I had one conversation with Tideland. Now I probably could have walked away and got, man, I got, $26,000 of value from that conversation. Huge win. But at the same point in time, if we're not going to talk about numbers or whatever you guys charge. But at the end of the day, it's like, okay, you guys are going to charge what you're going to charge. And it's like, man, that's like right off the rip. That's delivering a deliverable right there. That is like, Greg, I just saw you write that $12,950. Keith can bill both of us for a service. Destiny, we'll share them or whatever. But, my point being, guys, is that, and I want to just, Keith, our show is definitely about educating people for sure, entertaining people. But I talk about, it's usually from a standpoint of marketing. No one ever wants to spend the marketing dollars, or they cheap on the marketing dollars. And it's just like anything else. You think you're the best parasailer on the planet. You think you have the best boat rental on the planet. You have the best dolphin cruise. And that's why you charge the most amount of money, because you're delivering the best product. Maybe you don't. Maybe you are the lowest price in the country. And we all know what that can get you on a fucking parachute attached to you. But, my point being, guys, is just that this is something that's like, you really have to think in terms of value and deliverables. Like, you're not going to be able to put like a final price tag on some of this stuff, because it's a constant evolution in your business and a constant learning experience. So sorry, I just had to sidebar that a little bit.
No worries. Keith, let's keep going unless you had anything else to add to that one.
No. So, paying kids is kind of, the number one go-to, right? The next one that a lot of folks don't know is it's what's called the Augusta strategy. Okay, so if you own a business, it's got to be either an LLC filing as an S corp, or an S corp elect, or just an S corp. It can't just be a standard LLC in this one. Creating the difference there is one piece of paper. So if you're currently an LLC only, I will encourage you and save you about 8% on your tax bill and your payroll to go ahead and file for an S corp elect, and we can talk about that at another time. But where I'm going with that is the Augusta strategy. So everyone knows the Augusta National, right, golf tournament in Augusta, Georgia. That's where this thing was created. The folks who lived on the golf course were renting their houses out during those 2 weeks where the golf tournament was in town, and they petitioned IRS saying that they shouldn't be taxed on that income for 14 days because it's not a true business, it's a hobby. They won, and which created the Augusta strategy, also known as 280A in the tax code. This allows a business owner who has an office outside of their primary residence. Okay, so you can't utilize your home office in this one. You have to have a standalone office outside. This allows your company to rent your primary residence for up to 14 days a year. This is for board meetings, get-togethers, functions, whatever it may be. But for 14 days out of the year, you can then rent your primary residence to your business. There's some paperwork that has to be created, which we can help you guys with, and I can send that over to you guys so you can pass it out if anyone needs it. But essentially, we create a lease between your business and your personal name, and then we create the 14 days that you utilize it. This allows your company to rent your property for that night. So let's break that 14 days down into one day. You guys are having clients over, potential clients. In your world, everyone's a potential client. So everyone that shows up to your house could potentially rent a boat from you. That checks the box. You can then write off food and drinks. You can write off the DJ. You can write off paperware, whatever that is you need. You just can't write off anything that can be used again. So this is a one-stop shop. So catering can be written off. All the party fun can be written off. Plus, you get to rent your house. We come up with that, and we utilize basically 10% of the value of your home is kind of where that number lands. We go off local Airbnb. So for you guys in Destin and around the sea, the shoreline, that number is going to be inflated because everyone pays more to be by the ocean. So it's in our benefit. We look at local convention centers and what they charge to rent out for the day, and we come up with that number. So let's just say it's, we come up with $500, $600. That's $8,400 that you can stroke your check from your business to your personal pocketbook and not pay one dime in taxes. It's tax-free money. Okay. So between those two strategies, that's $30,000, $40,000, $50,000 in some cases. I know some of you guys have, 4 or 5, 6 kids. But that's another strategy in which you can move tax-free money from the business to your personal pocketbook and not have to worry about picking up taxes on the personal side. Reducing taxes on the business side, keeping more money in the business, putting more money in your personal account. That can lead to you guys reducing your W-2 income, right? If you don't want to make more money, you just want to be more conscious of how we're moving it. Reduce your W-2 income, saving you even more taxes. This thing can go into a huge spider.
And Keith, that doesn't have to be consecutive, does it? It can be just 14 days, period. Okay.
14 days out of the year, period. Yep. And as long as, the paperwork's in order, and if Uncle Sam wants to send his buddy to sit on your couch and take up residency, and I hand them a folder and they go away.
I got a follow up. So let's talk about bad CPAs for a minute. What is and again, something pretty basic that your CPA is doing, that almost all CPAs are doing, that you're going that you see this all the time and you're like, oh my God, fuck, I'm paying my cousin, she's my CPA, $175 a month or whatever it is, and they do my taxes and fucking it's great. Mm-hmm. What are those CPAs mostly fucking up?
Everything. I mean, we don't have enough fucking time. Again, they're just not being proactive. Most of the time, they are ultra conservative. So when I hop on the phone with some of our client CPAs and I say, hey, we're going to implement the Augusta strategy, we're going to pay the kids, it's like fucking the lunk alarm at Planet Fitness goes off. Right? We don't want anything to do with that because we don't want to potentially get an audit. Okay, well then that's number one of where they're screwing up. Okay, they're reactive, so they're not talking once a month. That's the second point that they're screwing up. And the third point is that, again, they just want you to send all your shit over in December and then pay them their fee and then pay the government an exorbitant amount of money that you shouldn't have to pay them.
So I think maybe the takeaway from this, and correct me if I'm wrong, is that, look, you look at the top 1% of the country, the Elon Musk, the Donald Trumps, all these super wealthy guys, they're getting audited every fucking year, right? The IRS audits billionaires every fucking year, every quarter. They rifle through their shit. So and again, tell me if I'm wrong here, but the point is, if you're utilizing everything to your advantage, you are reducing your tax liability, you're keeping more money, and at the same point in time, you're remaining in compliance because you're following the letters to the law and you're good to go. So it's like, yeah, well, fucking cool. Audit me. Because we did everything correct and by the book, and we're still ending up with, and without getting off into like any political rant, I'm kind of pretty sure like this is why Trump doesn't want him rifling through his fucking tax shit, because he's like, yeah, man, I'm just using the system and that you guys created, whatever. I know we're not a political show and I'm not trying to do that, but I'm talking about more him as a businessman. Yeah, absolutely.
I mean, take Trump's name out of it. I've got clients that, they're making, retarded amounts of money, real fuck you money, to the tune of they can go buy what they want, when they want, where they want, how they want, and they're getting tax returns. Okay, they're making all this money hand over fist, and they don't pay into taxes because they're taking advantage of the tax code. The other two big free takeaways that I wanted to deliver to you guys and your crew is depreciation. Right, so everyone hears this fucker from their CPA. Hey, you had a really good year. It's December 15th. You got 15 days to go buy a truck. Go buy a car. That's the go-to. And that's good because you've got depreciation and bonus depreciation on that, which has gone down this year to 80% in 23, but it's still a good opportunity. So for you guys that have, boats and are buying boats and jet skis and all of this equipment that we can accelerate the depreciation on, that does help. Cost segregation studies on real estate is the killer. Okay, this is where the game changes. So a lot of us have businesses. A lot of us take the money that we create in this business and buy wealth elsewhere, right? Real estate, rentals, short-term rentals, long-term rentals, commercial property. You can accelerate the depreciation on one of those pieces of property the same way you do a 6,000-pound truck. Okay, so I'll give you a real-world scenario. We created a cost segregation, or we completed one, in July. It was a new construction single-family dwelling. My client bought it to turn it into a long-term rental. We did a cost segregation on that. We accelerated the depreciation up into like 7 years from the 39-year amortization. We bumped it up to a 7-year depreciation schedule. It saved him $77,000 in taxes this year.
So Keith, this is real interesting. When you talk depreciation in your home, are you talking about the wear and tear on the home? Because don't homes appreciate, they don't depreciate technically. Where am I getting this mixed up?
Yeah, so I'm not talking about depreciating your asset. I'm talking about the depreciation that you take over the 39 and a half years when you buy a home. So if you buy a home, I paid $800,000 for my home, right? The one that we currently live in. Every single year, I depreciate $12,000. It's just part of the amortization scale. Of you paying $800,000, you depreciate that over the 39 and a half years.
But you're talking about the interest.
Yes. Yep.
Oh, okay.
Yeah, right. Not actually depreciating the value of the asset itself, right? So there's a 39 and a half year scale that this amortization when you buy anything, the same way when you buy a car, right? Well, we accelerate that into 1, 3, 5, 7, 10. It's different for everybody, right? But we can accelerate that. And instead of taking $10,000 to $12,000 to $15,000 every single year, we take much larger pieces in each individual year on the front end. So in this particular space,
are we not already getting a deduction with interest? The interest we pay on our mortgage, we're getting a deduction there. So you're saying on top of that, we can get additional.
Yeah.
So he's accelerating it. So instead of 1 year, Greg, we do the same thing with our boats, right? So when I buy a boat, it's technically not an asset, an appreciating asset, it's a depreciating asset. So we have a 5-year schedule on our equipment. So I can accelerate that depreciation over 5 years and depreciate it in 1 year. This is why everyone in our industry constantly is buying tons of boats every year.
True.
Because you buy the boat and then you accelerate the depreciation on it, and then you can write off all of the entire payment for that boat, and it's not an asset. It's an asset, just an appreciating asset.
Okay, so but what if I have a really shitty year and I don't, wouldn't that be a situation where you wouldn't want to accelerate you'd want to use that write off for a year that you made a lot of money and you need some deductions? Is that?
We do it every year. We do it every year. Because, and sure, if there's a year where we just get, flatlined for whatever reason, we'd probably not explore a lot of these things, right? Because there's no need to do it. But I can tell you, to Kevin's point, like, you guys see in your industry every year 10, 15, 20 new boats coming in, right? Guys are doing the same shit in real estate, right? So this particular client, what did he do with that $77,000? He bought 2 more pieces of property, put down payments on, and so now the cycle has started. So now instead of buying 5 boats, you're buying 3 pieces of real estate, 4 pieces of real estate, and you're depreciating them all over the same way. And you just stack the deck full of wealth, right? Full of cash flow, monthly cash flow. You've got all of these assets built up, but the generation of that came from the main business, right? So that's where this all comes back in full circles. Like, let's get real intimate with our numbers. Let's understand where we can save as much money as we can from the government. Let's understand how to maximize each dollar, liquidity and leverage, and where to place assets. And then let's build the cash flow.
Got it. I want to make one point about the CPA thing. So we've been in business for 15 years. We don't have a CPA because they suck. Every CPA that we hired, they charged us an arm and a leg, and they did exactly what you were saying. They just said the basic things I could go on Google and find. Yeah. This is, I think this is a really important a lesson to everybody, is that a consultant like Keith is going to go in a whole different direction, than a CPA would. I feel like and there are probably some good CPAs that you're aware of that will tell you about these things. But I always ask the CPA, what are some things that no one's talking about that you can give us? Like, what are the secrets where the wealthy are using? And I can never get a straight answer for any of them. It's like they don't even want to try to deploy the really creative solutions. So I use a tax preparer for my tax returns. It's like $500, and they just put all the numbers in, because why do I need a CPA that's just going to do basically tax preparation services and not give me the really good advice, to save me money? So
because we're paying them $300 a month, dude. And I fucking hate to say it, and I'm just gonna, and this is why, like, when I spoke with Keith, that I was like, yep, because so I had the same fucking problems. Me and Ilya talked about it nonstop. I'm like, dude, I need somebody with creative solutions. I need somebody that has fucking that has a dog in the fight, that fucking has an interest in my business. And we all know the fucking answer to what that is. You gotta fucking pay him. It's either that or he becomes like my partner, and I'm definitely not giving that. I only need one sexy guy in my organization. I'm the top fucking dog and the sexy. Oh yeah, I love those even fucking more. Well, look, man, listen, I got a date night that's getting ready to start here with my wife that may or may not involve gambling. I know Greg's like, oh, what? You're gambling without me? But so me and Tammy got a date night that involves a casino down the road there. Keith just thinks I'm a degenerate gambler, because when we first talked, we were at a rival, Greg, and I went out and Keith and I got on the horn and we started having a conversation, and we were in Vegas in a rival, and Keith's like, what the fuck are you doing, man? He's like, the first thing I got to tell you is like, don't lose all your fucking money, man.
The dude called me from the damn slot machines, bro. He didn't even try to hide it.
I was like, listen, I need a creative solution on how I just burned all this money.
He's like,
man.
How do I overcome $5,000 loss?
Well, Keith, Kevin, do you have time for one more? Maybe, do you have one more?
What's that? Question?
Well, no, he had one more piece of advice on.
One
more tip.
So it was the cost segregation, but I also wanted to answer the second question Kevin had real quick too, on like what do you want to look for in someone like us or financial advisor? So listen, I came from Northwestern Mutual. I came from a organization, right? You don't want to work with anyone who works for a company only. So no Northwestern Mutual representative, no Mass Mutual representative. If they're representing a company, they're selling you something in return for their advice. You want an independent fiduciary. You want someone who's got a consulting firm that represents many different companies and can, bring all of the different solutions to the table. And they're not just chasing, what place am I at in my office in Jacksonville? Like, have I outsold the next representative in my office? So make sure that they're a fiduciary. Interview the shit out of them. Ask them all the questions, like, how do you operate? What's the fee? Tell us about how many times am I going to see you? Are you proactive, reactive? Give me some examples. Let me talk to some of your clients, whoever might, be interested in sharing their experience. But you definitely want someone independent. You want a fiduciary. You want to make sure that you look them up on Broker Check, right? It's a website you can go and type anybody's name. It'll bring up all their licenses, what states they're operating in, and all of the information. That is the secret sauce, because you can go in there and see, hey, this Johnny had a DUI 3 weeks ago, and he's divorced, and he's got a lien on his house, and all this shit. Well, that guy can't be giving you real money advice because he's a shit show himself. So just do the due diligence. Start with Broker Check. That's going to give you all of their professional data. And then just go in and interview. I'll help you interview people. I don't care. Those are fun.
I love it, man. Dude, I got to tell you, like, I'm completely transparent. I was like, I looked you up. I didn't go on a Broker Check or anything like that, but I was like, oh man, I was like, you look like, I found your Johnny Cop picture on LinkedIn, man. You look like
something with the outlaws in town, bro. You kidding me?
No, you're all clean cut, dude, and fucking you look like a total cop in that picture, dude. I was like, I think this guy's fucking trustworthy. He looks like a cop, man. Now you don't look like a cop. You look like a convicted criminal like myself. But just kidding.
Birds of a feather.
Not white collar though. Totally blue collar. Like,
100%.
Assault. So Keith, man, if anybody listens to the show and they're like, man, I like that guy, we want to hire Tideland, how do they get I don't even think you even said the name of your company. So, we introed him correctly, right?
But Keith, go ahead and just give us a little, like, how people contact you if they want to learn more or ask a question.
So my cell phone's probably the most simplistic, 904-401-9327. Our website is tidelandconsulting.com, Tideland. So Tideland fits right in with your fucking boats, right? Tidelandconsulting.com. Email is keith@tidelandconsulting.com. But like I said, man, I'm a fucking available dude. Hit me on the cell phone, shoot me a text, whatever it is, or get with Kevin, get with Greg. They can get a hold of me as well.
Awesome, man. Well, brother, thank you so much for coming on, dude. Incredibly illuminating show, man. I think this will probably be one of anytime we talk about money, those shows always download the most, man. So I think people get a ton of value on it. Thanks so much for your time. And as always, guys, thanks for listening, and keep it awkward.